What's up, everyone? It's Caddy with Money Vesting. So quite an uneventful day with the Nasdaq here pretty much down about 10 basis points. We've got the S&P 500 down a little bit over 30 basis points, and the Dow Jones was the one that was really selling off here on the day, down a little bit over 70 basis points or 232 points, with the 10-year yields also pushing higher back up to over 3.94%. So lots of momentum kind of coming back down to the downside, and a lot of momentum to the upside for the 10-year yields and for the dollar index. And for the month of February, all three indices are down after obviously having a very solid start to the year in the month of January. So hope you guys enjoy this video and find it helpful. If you do, don't forget to subscribe to the channel, and the link to our Discord and Patreon is going to be down below. Don't forget, there is a 16% annual discount that does expire tonight. So in under 3 hours, if you want to take advantage of that, the link's going to be down below. And after that, that 16% annual discount will go away, and you'll get access to all the trade ideas. In fact, I shared two new trade ideas with all the members today, and also we'll be starting our real strategy on options in April of 2023. And of course, you'll get access to all the private videos and benefits as well. So links are going to be down below if you're interested. So home price gains weakened sharp to end the 2022 according to Case-Shiller Home S&P 500. So this right here, I wanted to bring this up because it's quite interesting how the house market or the home prices are also weakening in 2022. Of course, they are still increasing, right? So it's kind of like a weird concept that they are still up year over year, but not as much as what we have seen before. So 5.8% was that number in the month of December versus the gain of over almost 19% in 2021. And back in November, actually, the prices were up 7.6% on an annual basis. So you are really starting to see the lag effect with which the economy gets affected with higher interest rates. And by the way, there was a really good video idea from one of my members that pretty much talked about what really is the lag effect, right? So I'm going to break down in a separate video going over the lag effect of interest rates with respect to the economy, the timeline, and how the wheels, once they start turning, it's really going to put a pretty significant impact on the overall economic growth with respect to unemployment, asset prices with respect to home prices, and of course, economic productivity as well. So all of that I will cover in a separate video, but just go show that we are now starting to see some cracks in the economy. So Dow closes more than 200 points lower Tuesday. Major averages end February with losses. So Dow Jones fell 232 points or 0.7%. S&P shed 0.3%. Nasdaq closed 0.1% lower. The Dow ended 4.19% lower for the month and has dipped 1.48% year to date. So Dow Jones is actually now negative for the year. The S&P 500 lost 2.61% and the Nasdaq lost 1.11% in February, but are still higher year to date. So we are still seeing a lot of momentum year to date, and of course thanks to January, because the markets were very high, very bullish in January. But February, I think we're seeing a little bit of reality set because the January numbers came in super hot. But new month is here. So starting tomorrow, we've got March 1st. Unemployment is March 10th. Inflation is March 14th. And the Fed is March 22nd. So we've got, 12 days of lots of data coming out. In the first week of March, not a lot of data, but still a lot of economic stuff that's going to be very important for the market. So on Tuesday, the benchmark 10-year U.S. Treasury note hits its highest level since November. Most investors are expecting the 10-year note to vault at over 4%. I see 4% as a ceiling in yields that will help equities recover in March. This was Jeff Kilberg from KKM Financial founder and CEO. And this February flip should be selectively bought. Inflation is abating. It's not just a straight line down from June CPI 9.1% print. February was intentional Fed-driven backpedal to the FOMO by under-allocated equity investors we witnessed in January. So he's pretty much suggesting that this dip should be bought considering yields are not going any higher. And I actually asked everybody in our live chat on our YouTube how many people believe that yields are going to be tapping out at 4% versus 4.5% versus 5%. And to my surprise, majority of people were expecting 10-year yields to get up to as high as 4.5% to 5%. Can't remember the specific number, but I believe over 40 to 50%, almost half of the participants in that survey in the live chat expected 10-year yields to get up to at least 4.5%, if not 5%. Now, if that ends up happening, that's most certainly going to be putting additional pressure on the overall economy, and not to mention US stocks as well, equities in general, because of the higher risk-free rate and the higher discount rate, lowering present value of our future cash flows, and as a result, the valuations will obviously come down. But I am exploring another trade idea with respect to the 10-year yields, because I do think that eventually we will start to see the 10-year yields, despite getting tapped at 4%, 4.5%, or 5%, there is going to be an opportunity in very, very specific trades, which I will be sharing with all of our members as a potential idea moving forward. I'm interested in taking that trade myself. So we'll be exploring that in our Discord and Patreon later this week. Now, gold and silver closing out worst months in more than a year as well. So these commodities were also down. Gold was down 5.58% in February. That's the worst month for the metal since June of 2021, when it lost 7%. And silver had its worst month since 2020, ending February down over 11%. It has saw a bigger monthly drop in September 2020 when the metal tumbled 17.8%. So a pretty substantial selling pressure in commodities. And with the Fed rates arriving and becoming entrenched this year, equity markets will have to wait even longer for the Fed puts as on Tuesday. And while high rates will make life difficult for equities, it potentially creates a sweet spot for fixed income. So just like as we were discussing, the 10-year yields have been going higher and they're probably going to go even higher. That does create opportunities for fixed income. And he goes on by saying, and I quote, "Investment grade credit looks attractive, particularly the front end, and we believe an active approach can push this up to north of 6%. The inverted yield curve offers value at the front end." Front end meaning the shorter rates, right? So front end versus the back end. Back end is going to be longer duration bonds. Front end meaning short term bonds do offer a lot of value because they are yielding pretty high yields, right? So they've got 6 months right now is over 5%, so that's a pretty good yield. So all in all, I mean, the day was very, very flat. There was a lot of indecision in the markets. Meta was up over 3%. Google was flat, Amazon flat, Tesla slightly down, Nvidia was down over 1%, Microsoft, Apple very, very flat. Healthcare did sell off here on the day. We got energy also pulling back, with utilities really selling off, and financials kind of flat here on the day. So, a lot of the pain was kind of concentrated on healthcare, utilities, and energy. So a little bit more of the value-oriented stock and more Dow Jones-related stocks, and that's one of the reasons why Dow was really struggling and sold off more than the Nasdaq and the S&P. And with respect to the S&P and the Nasdaq, I think Meta held up really well. Applied Materials held up really well. And overall, we did see a little bit of consolidation for big tech. Not so much of a selling pressure, but lots of consolidation sideways. This right here is the entire market. So once again, you can see very, very flat kind of day with energy, utilities, healthcare, and defensive, some of the worst performing sectors, with basic materials, financials, and communication service performing much better. And over the last 1 week, we've got a pretty mixed picture, with most sectors down, few of them very, very flat and consolidating sideways. And over the last 1 month, we've got all 11 sectors in the S&P 500 down. Lumber prices, cocoa prices, and orange juice once again for the win. Oats and volatility, soybean, natural gas pushing higher, with coffee, cotton, and sugar pulling back here on the day. Bitcoin just trading above 23,000, Ethereum just a little bit over $1,600 at the moment. So talking about volatility first, we are once again seeing the VIX kind of consolidate sideways at around 20 to 23. So for the most part, we've just been trading sideways in that range. Every time the VIX spikes a little bit, we see buyers step in because of the stronger sentiment, because of lots of euphoria in the markets, and as a result, volatility drops and the markets get a lift. But right now, we are definitely going through a lot of consolidation sideways. There's still a lot of data yet to be reported, lots of earnings still yet to come. So support level really is going to be at 19, closer to 20 levels. And of course, we're watching 23, 24 first, all the way up to 25, to as much as 35, to as much as 40. And don't forget, there are some pretty big bets on the volatility by, getting up to over 50 levels by May. Crude oil here, once again, getting a bit of a bounce. Not a surprise. This should not come as a surprise to anybody, because we have, identified this support for crude oil, and every time it comes down to low 70s, it gets bought up. And right now we're seeing exactly that. It's back up to $77 per barrel. So next resistance really is going to be around this resistance at close to $80, $81 per barrel for crude oil. So that right there is going to be that level to watch next as a target for crude. Talking about Ethereum, so again, lots of consolidation. We have seen a couple rejections here at 1700. So this right here is going to be that red rectangle that we have identified from our previous videos. And we've also got Bitcoin struggling at around $25,000. So this right here is going to be that resistance for BTC. And right now we are seeing a little bit of a pullback, lots of consolidation. Support level is going to stay up at 22.4 and resistance all the way up to $25,000. Now talking about the markets, S&P 500 here. So yesterday we talked about how there was a red candle on a green day, right? So and today there was a red candle on a red day. And once again, if you take a look at the sentiment, right? I'm not talking about the how individual stocks did or not did, but simply taking into account the sentiment, right? So if you take a look at the logic behind this candle, the buyers had us pegged all the way up to as much as 3,997 to be precise. That was that level we were trading at. And guess what? Sellers once again stepped in to bring us right back down to close even lower than where we opened at 3,970, right? So just kind of think about what happened behind that candle. Same thing happened yesterday. But the opposite happened the day before when we were lurking around the 200 simple moving average. So the S&P comes down to 39.42. This time the buyers step in and push us back above that level and we get up to over 39.70. So bottom line is that there is a big battle. There is literally a battle going on between the buyers and the sellers, between the bulls and the bears right now as we speak. And that's why we're seeing a lot of indecision in the markets. We're literally just not going anywhere because neither of them wants to cave. If the bulls had caved, we would be trading below that 200 SMA and this market would have rolled over even further, coming down to under 3,900. If the bears would have caved, we would have seen a very successful recovery from that 200 SMA. But instead, we have seen 6 consecutive red candles, even though we may have some green days here and there. So this right here was pretty brutal, down 2%. Then the following day, only down 0.16%. Then the next day, we were up 0.5%, but a red candle. This right here, another down day of 1%. The following day, we were up. Yesterday, we were up 0.31%, but red candle once again. So that just goes to show the bulls are really trying to fight this recovery. We're really trying to kind of bounce off of that 200 SMA, but the bears are just strong enough to keep us down, and they're stepping in towards the end of the day, towards the back half of the day to really bring us down and close at a lower level. So there is a pretty significant sort of back and forth between the bulls and the bears. The sentiment is really, really undecided at this point. So it's going to be quite interesting how we trade rest of this week. And that support level really is going to be sitting roughly at 39.40. So that's going to be that 200 simple moving average all the way down to as low as this level at 39.86, 3,900, call it 3,900 here, and then all the way down to 37.75 for the S&P 500. Right now, it seems like we are starting to break a little bit more from this higher low. Talking about the NASDAQ, and same thing, NASDAQ's very much at that 200 simple moving average. So a little bit of a green candle with a very small body on a red day. So this right here, we're actually going to get rid of this, but this right here, the 200 SMA is going to be the one to watch at 11,400. So that's going to be the most important level of support to watch for the NASDAQ, and that's what we're really paying attention to moving forward, with resistance sitting all the way up to 12,200 levels, and of course support all the way down to that 200 SMA to as low as 10,200. Talking a little bit about Apple now. So Apple on the day was again very flat, trading right above its 200 simple moving average. So resistance is going to stay put, kind of in line with this 300 simple moving average and this previous resistance sitting roughly at 157, something that we have talked about in our previous videos. I don't know what's going on with my undo key, right? Command Z. It's not working. Anyway, so 157, 152, big resistance for Apple, and support level is going to stay put at that 200 SMA all the way down to 137. I do think that Apple, God, this is frustrating. I don't know what's going on with my undo key here. It's not working. I gotta get checked that. But anyway, so 137, 134 is going to be that support, and I do have my fair value on Apple a little bit lower in the 120s, so I will be a lot more interested in buying Apple from a dollar cost averaging standpoint and from a swing trading standpoint at those levels. Talking about Amazon, and Amazon here is also coming down slowly and steadily. I mean, it has come down from its $114 level, down 18%, down to now under 95. Support level is going to stay put around here. So this right here is going to be that level to watch, sitting roughly at $91, $92. Resistance all the way up to $104 per share. And Amazon also does offer an opportunity for a potential swing trade. I mean, we did take a swing trade in the past when, Amazon did rally quite a bit. It pushed up 19-20%. In fact, it ended up rallying quite a bit more, over 32%. But now since it's come down so much, RSI and MACD do look a little bit oversold. Not so much on the RSI, but definitely the MACD. We'll be considering a potential swing trade on Amazon as well. Now, the big star of the show for tomorrow, Tesla here. I will be doing a separate video on Tesla very soon, literally later today, going over, what to expect from tomorrow's Investor Day presentation. And this right here is going to be a potential bull flag that we are forming. God, that's frustrating. That we're going to be watching for Tesla. So this right here is going to be that level to watch, and we'll see if Tesla's Investor Day presentation kind of lives up to its hype. And if we see a breakout past 228, if we don't, I'm all ready for a potential pullback as well. I'm hedged the right way. So even if Tesla comes down to, let's say, 160s, 170s, my calls are going to get further out of the money, hence printing and being up 80 to 90%, at which point I will be looking to close them out. But even if you do get a breakout, that's also fine. That would be a very strong breakout of the upside. And the next target is going to be all the way up to 253 for Tesla, 253 to 265 for Tesla. Talking about NVIDIA here, NVIDIA coming down a little bit, 1%, still coming down to that support of $230. So this right here is going to be that level to watch for Tesla, NVIDIA. And this right here is going to be that gap that NVIDIA needs to fill moving forward after the gap up that we had on earnings. So I still do believe that NVIDIA is one of the most overvalued large cap tech companies out there. So I would definitely be staying away from this company for some time, considering the higher valuations, considering the technicals, and just so many things that go around analyzing a company. It's just, nowhere near close to the fair values that we have calculated. So support level is going to stay about at 230. We've got a gap to fill here all the way down to 190. That's going to be in line with that 300 simple moving average. But if this rally continues, we're looking at 269 as that next resistance. But at that point, NVIDIA would be just like off the charts when it comes to the value of this company. Talking about advanced micro devices, and AMD was slightly down 0.24% on the day, trading a little bit under $79. This right here is going to be that resistance to watch for advanced micro devices, sitting roughly at around $78, $75 or $79. And support level is going to stay put at $71, $72, and kind of in line with this gap that we also need to fill eventually for AMD as well. Talking about PayPal, and PayPal on the day not doing super well, but consolidating sideways and finding a support at that level. So we are seeing the RSI and the MACD once again roll over and come down, something that we did talk about in our previous videos. So PayPal is also going to be on the table for a potential swing trading idea. And resistance right now, $75.82, $76. So this right here is going to be that intermediate resistance all the way up to that 200 simple moving average, sitting roughly at $82 per share for PayPal. So those right there are going to be some levels to watch. And of course, we got a fair value sitting in and around these levels, and support levels going to be sitting roughly at $67 next in case we break down even further and start to fill this gap in between $70 and $73 per share. Talking about Square, and Square here was up 2%, so a little bit of a rally, but this right here is the lower highs and lower low pattern for Square, as we have been, trending lower, and this is the pattern within which we're trading at. Support level is going to stay put at that 200 simple moving average, and roughly at $69, close to $70 per share for Square, and of course resistance staying put at 89, close to $90, in line with that 300 simple moving average. Talking a little bit about Meta, and Meta actually had a pretty strong day today, pushing up over to 3%. So seeing some potential upside here. Next resistance is going to be that 300 simple moving average. That's going to be in line with $183, in line with this previous resistance that we have talked about in our previous videos. And support level is going to stay put at 153. We've also got a pretty big gap to fill over here for Meta, so that's going to be staying put. And again, support level is going to stay put at 153. Even right now at 175, the valuation is quite reasonable for Meta. Talking about Netflix, and Netflix was slightly down 0.28%. Again, getting a bit of a rejection here at 332. So this right here is going to be that level to watch for Netflix, and support level is going to stay put at 276. Again, similar to Nvidia, similar to Tesla, I think the valuation is a little bit on the high end for Netflix as well. And I do think the fair value, obviously, at low 200s is quite reasonable for the company. So we'll be waiting for Netflix if and when it arrives at that support so we can take advantage of that deal. Last few names here. Google on the day pushing up 0.22%. So I did share a trade idea with our members on Google. So again, if you want to get access to those trade ideas and alerts and everything else, the link's going to be down below if you're interested in joining us. But I do think that Google has potential on the upside here considering how much it's sold off. So it's pretty much down 18%. It's come down to its 52-week lows. And, I think the selling pressure has a lot to do with ChatGPT and a lot of the fear and uncertainty around Google's business. But I think it's just going to roll over considering how strong Google's economic ecosystem and the moat really is for this company. So support level at $88, $89, resistance and target up to $100, all the way up to $105 for Google. Talking about Microsoft, and Microsoft on the day was down 30 basis points, so it's coming down also. It's recently pulled back about 10%. Support level is going to stay put at 246, 247 for Microsoft, and resistance all the way up to as much as, that 200 SMA. Right now we're getting tagged and rejected at that level at 252, all the way up to the 300 simple moving average at 266 for Microsoft moving forward. And last but not least, we got Shopify, and Shopify here also getting a little bit of a bounce considering how oversold it really is. Resistance right now at 41.45, so this right here is going to be that level to watch for Shopify. God, that's frustrating. Shopify, and then that the potential target back up to that level beyond this resistance is going to be sitting at roughly around $54, $55 per share for Shopify. So this right here, the first intermediate resistance, all the way up to as much as $54, $55, but we've also got a gap to fill for Shopify from $47 to as much as $50 per share. So hope you guys enjoyed this video and a complete update on the markets. The bottom line is that we are definitely in a very, very uncertain, indecisive environment where the bulls and the bears are kind of fighting with each other, and we're not able to see any clear direction from the markets. But that being said, there is still a lot of macroeconomic data coming out. I am being very cautious, as cautious as I can be, with respect to inflation, interest rates, and of course the economic growth that is going to take place in 2023. I will be doing a separate video talking about the lag factor of higher interest rates and how quickly or how soon we can start to see some effects of that in the economy. But tomorrow, Tesla's Investor Day, we'll be doing a separate video on that as well. But hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe, and the link to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available till tonight if you want to take advantage of that. So always happy investing, and I'll see you all in the next video.